We're just a few months away from cannabis becoming legal in Canada, and there's a lot of pent-up demand. A recent survey by Ipsos found that 1 in 3 Canadians intend to try marijuana once it's given the regulatory green light. Soon, it's expected that hordes of customers will be banging on the doors of cannabis shops looking to buy. But they may find store shelves a little barren, and that will be a boon for licensed producers. This analysis from Canaccord Genuity explains why. Analysts predict there won't be nearly enough cannabis available in time to meet the early enthusiasm. They see demand steadily rising from about 500,000 kilograms in 2017 to 800,000 by 2025. That's the dotted green line on this chart. However, cannabis supply won't catch up until 2020, represented here by the solid green line. The two are expected to stay roughly in line after that. That initial gulf between supply and demand should keep prices high for several years, and that's a tantalizing opportunity for cannabis producers. Many are rushing to get their operations up and running and build scale as soon as possible. The reefer madness is sparking a land grab like no other in recent years. Real estate brokerage firm Jones Lang LaSalle has crunched the numbers on the cannabis space. It estimates Canada's 8 largest producers will require roughly 8 million square feet of additional production space by 2020. That's a 5-fold jump from today's levels. Alberta, Ontario, and Quebec will see the biggest influx of property buying. Invictus MD is one of the companies that isn't waiting to seize the moment on recreational cannabis. The company is embarking on one of the most ambitious expansion plans in the industry. It currently has about 55,000 square feet of production space in operation today. By the end of 2019, it wants to have multiplied that by nearly 10 times and be cranking out more than 76,000 kilograms of cannabis per year. Invictus MD CEO Daniel Kriznic explains the finer details of the plan and how it will position his company as a leader in the sector. Daniel, Invictus MD calls itself Canada's cannabis company. How can you define that and characterize that for us? What does that mean exactly?
Yeah, definitely. It's basically Canada's cannabis company was intended to really capture the regulatory landscape of Canada becoming legal, not only medicinally, but recreationally over the coming months into Canada. And then as we progress towards looking at other countries that are becoming legal, Canada's cannabis company Invictus will also be spreading into the other countries.
How are you different? How do you stand out from all your competitors out there?
Yeah, it's an interesting question. I get it all the time. So in terms of standing out to competition, right now, one of the main things, we are one of the licensed producers that received the license prior to, let's say, the first 50, prior to the next 50. The next 50 of these companies that are getting licenses will not have product-ready cannabis for the recreational market coming at the end of 2018. We are one of the companies that will. So a lot of people talk about branding and how you differentiate yourselves, and because we're in an era of unknown in terms of marketing and branding and more vanilla packaging, etc., it's going to be more speed to market to get the product into the shelves and continue to provide consistency and quality product. So that'll then, translate to additional profits and more product getting out to the market as we expand in our locations.
Speaking of expansion, update us on that, and how are you financing that? You're pretty well fully funded out to 2019 or not quite?
No, so we've got fully funded up to 20,000 kilos right now. So right now we have about 100,000 square feet of space that will be available for cannabis production. By the end of 2018, which should be at about 200,000. That's fully funded. Now by the end of 2019, we expect to be at about 520,000 square feet of cultivation space, and that's about a run rate of about 50,000 kilos per annum. So currently we've got about 22 million in cash in the bank. That's going to be funded for about the 200,000 square feet of expansion. And then going forward, we'll do other financings, whether it's through the capital markets. We're seeing more companies now come out with debt financing, which is great. Good interest rates, good security packages. So we'll definitely look at some debt financing down the road as we continue to get more cash flow into the business and provide more of a cash flow based debt package.
Some investors may or may not know that Invictus MD actually supplies Canopy Growth. So how important is that for your company?
Yeah, so Canopy Growth, the original deal with Canopy was that we would get certain strains from Canopy in a time when it was very difficult to get strains. So those strains, we've committed to providing Canopy with a product from those strains. But within and that's just in AB Laboratories in Ontario. Acreage Farms in Alberta is full vertical integration type of company. It is looking to get additional strains right now from the Netherlands. That should be coming in the coming days here. And then with the Canopy model in terms of a wholesale, we'll continue continue to evaluate that as we go into these different provinces and we go into the recreational market. So it's not a necessary, a term that we're going to be continuing with over the long, but we'll see how that goes over the coming months.
On the cost side of things, you've got companies like Afria, and they're all about low cost. And then you've got Organigram, they're more sort of on the premium side. Where do you fall?
We fall on the Alberta side, we fall at a low cost. We actually have low cost electricity, low cost of disposal, low cost of water. So we're talking around $1.30 a gram. It's all grown indoor, but it's still very low cost. In Ontario, it's a little bit higher because of electricity costs, but we fall not as the cheapest, but not as the most expensive. So somewhere more in the middle range.
What about the stock, Dan? You've been around for a while. It's a wild sector, as you know.
Yes.
Things are a little more subdued now, but do you think you're undervalued, and how would you compare yourself in terms of some of the metrics with some of the other companies?
Yeah, I would say that if you looked at purely from the metrics of the other companies, I would say that the stock is undervalued. It's not because I'm conflicted in saying that. It actually just based on the numbers, we are undervalued. A lot of the companies are looking at a funded capacity type of calculation, which is about, let's say, $20,000 per kilogram of funded capacity would be the market cap, and we're sitting around 8,000 to 9,000. So definitely, there's room for growth there. I think a big catalyst for us is going to be sales license in Alberta. So we're waiting on that. We're having sales inspection as we speak in Alberta. So I think once we have that, we'll have a fully rounded cultivation and sales license in both Alberta and Ontario.
One trait the rich and famous have in common is that however much money they have, it's never quite enough. And that describes KISS frontman Gene Simmons to a T. He's worth an estimated $300 million thanks to a lifetime of success as a rock star and serial entrepreneur. Yet he says he'll never stop wanting to make more. That's led Simmons to invest in a wide range of businesses, from a restaurant to a wealth management firm to a film production studio, and now cannabis. As we mentioned in last week's episode, Simmons has struck a deal with Invictus MD to become the company's chief evangelist officer. The rock star will provide marketing counsel to Invictus, assist with public awareness, and serve as a company spokesperson. He'll also help with branding efforts once cannabis is legalized recreationally in Canada. In addition, Simmons has agreed to attend at least 50 investor presentations and 25 company events over his 5-year term. It's quite a pivot for a man who's sworn off the abuse of drugs and alcohol his whole life. Simmons simply says he was wrong about some of the benefits of cannabis after he did his due diligence. He says he had many cannabis companies approach him about being involved with them, but he chose Invictus MD. Here's why. Gene, you've said that you had lots of opportunities in the cannabis sector. Companies came to you, but then you met Dan, the CEO at Invictus MD, and you guys really hit it off. So what was it about that meeting and Dan and the company itself that made you decide to get involved with this company?
Dan actually came in towards the end of the meetings. We had a full day of one company right after the other coming to my home, and I appreciated all that. And then we ran out of time, but I was told that this company called Invictus wanted to meet, and so I did a little reading about it, and that night we had dinner. When we sat down, we started to talk as people and about family and about his love for his daughter, and I immediately connected in ways that I didn't with some of the other companies. Difficult for me to get involved with people who make decisions by committee. It just takes so long to figure out that everybody's happy, and then you slowly move forward together. You want forceful, accurate, qualified leadership, and the more I found out about Invictus, the more I found out about Dan, and the more I found out about what they do, how they do it, the more excited I was as an investment, as a business strategy, because you can probably tell I'm an avowed, unapologetic capitalist. And anywhere I see an opportunity, legal of course, I want to jump on because I want to be on the winning side.
With Invictus MD, what's the key to building this brand, and what's the, I know it's early days, but what's the plan, what's the strategy?
The smart plan, as with anything, is division of labor. Teams are only as good as the members on the team, whether you're not a football team and so on. The goalie is going to take care of the goal, and that's what he does best, and the guy that's passing the ball. And the better aligned you are with the team, the higher the quality of the team is, the more likely you are to succeed. And underneath that, you've got to have something that's worth working on with all the talent and the moxie and everything. And I will tell you, from top to bottom instead of from bottom up, I'm very impressed with Invictus. If I haven't said it before, I'm bullish. Now, of course, some people think that the new ticker name, Gene, is self-serving and that I thought of it. I did not. They turned around and said to me, you know, genetics, Gene, that's going to be our ticker name.